Hey everyone, and welcome back for another deep dive. Today we're diving into a topic that you all been asking about, trend trading in the Forex market. We're going to be breaking down some key concepts from trend trading, trend lines, trend channels, and risk management.
Great topic. It's written by the FBS analyst team. Trend trading, a popular strategy, and for good reason. Essentially, it's all about identifying and capitalizing on the momentum of those currency price movements.
So we're not just looking at those like individual price fluctuations, we're looking for those bigger waves, right? Those bigger waves of market sentiment.
You got it. Just like a surfer, right? You want to catch a wave early, ride it for as long as possible. Trend traders, we try to spot those early shifts in momentum. That's where the biggest potential gains lie.
Makes a lot of sense. Now, the source mentions uptrends and downtrends. Can you break those down for us?
Yeah, so an uptrend, you see consistently higher highs and higher lows in price. Like, think of a rising tide that's an uptrend. This signals to us maybe it's a good time to consider buying because that momentum, it's upward. Now, downtrend, on the other hand, we're seeing lower highs, lower lows, kind of the opposite. Suggests, okay, maybe it's a good time to consider selling because the price, it's steadily declining.
So it's recognizing those patterns of higher highs and lows or lower highs and
Yeah.
lows. And that's going to tell us which direction that trend is moving.
Yeah, you got it. The thing is that no trend lasts forever.
Right.
And that's where it gets really interesting, at least for me. Being able to recognize those subtle shifts, those early warning signs that a trend might be reversing, that's what separates those really successful traders from,
Yeah.
the rest.
From somebody who is just, following blindly.
Yeah,
Yeah, you don't want to get caught holding on to a trade when suddenly everything shifts.
exactly, exactly. But before we jump into those reversals, let's talk about how we actually even see these trends on a chart. That's where our trend lines come in.
Okay, so those are those lines that we often see traders drawing on those price charts, right? So what makes them so important?
They act as a visual guide. They help us confirm a trend's direction, its strength, and we draw them by connecting the lows in an uptrend or the highs in a downtrend.
So we're essentially connecting the dots, right? Connecting the dots of those significant highs and lows.
Yes. And the more times that price touches that trend line without breaking through, the more reliable that trend line becomes. So it becomes like a support or a resistance level. And that tells us, okay, the trend is more likely to continue in that direction.
That makes sense. A trend line that has been tested and held multiple times, much stronger indicator than one that maybe has only formed once or twice.
Exactly. Think of it like a support beam. The more weight it can hold without breaking, the stronger it is, right?
Mm-hmm.
Now, let's move on to trend channels.
Okay, so if trend lines are the support beams, what are the trend channels?
So imagine drawing a parallel line to your initial trend line.
Okay.
So now instead of just one line guiding that price, you've got two. These lines, they form a channel, a pathway, if you will, within which the price tends to oscillate.
So the price is essentially bouncing between these two lines, kind of like a river flowing within its banks.
Perfect analogy. That's exactly how it works. The price, it might fluctuate, might go up, might go down a little bit, but overall, the trend, it remains intact as long as it stays within that channel.
This is all incredibly helpful for visualizing how price movements can be analyzed. But how does this translate into actually making those trading decisions? When do we buy? When do we sell? So we've got these trend lines, these trend channels. They're helping us to visualize this momentum.
Right.
But I imagine it can't be as simple as just like, oh, there's an uptrend, let's buy.
Yeah.
Oh, there's a downtrend, let's sell.
You're right. It's not quite that simple. I mean, that is the basic idea.
Right.
But if you're just jumping in blindly based on trend lines alone, that's like surfing blindfolded,
Yeah.
might be exciting.
Yeah.
Probably incredibly risky.
Very risky, yeah. So what are some of the nuances that we need to consider before we just hit that buy or sell button? Because the FBS analyst team, they outline a 4-step process for trend trading that I found really helpful.
Yeah, absolutely. Let's break it down. So step one, they say you have to confirm the trend. And that involves, actually analyzing that price action, making sure it's actually trending and not just, some temporary blip on the radar.
So we're looking for those consistent higher highs and higher lows or lower highs.
Yeah.
We're making sure we're dealing with a real trend here.
Exactly. And for an extra layer of kind of confirmation, a lot of traders, they'll look for validation from technical indicators,
Okay.
which these indicators, they analyze price and volume data and generate these signals that can either support or contradict, what we're seeing with our own two eyes.
Okay, so it's like getting a second opinion, right, before you make a big decision.
Exactly. Okay.
Okay, so we've confirmed the trend. What's next?
So Planning your entry point. Remember those surfers? They're timing their paddle to catch that wave at just the right moment. It's the same idea in trend trading. You want to enter strategically to maximize your profit potential, but also minimize your risk.
So we're not just buying an uptrend at any point. We're looking for a specific entry point.
Exactly. You don't want to just jump on any wave, right? A lot of traders aim to buy during what we call pullbacks within an uptrend, or sell during rallies within a downtrend. Those are those brief moments where the price temporarily moves against the prevailing trend. So it offers potentially a more favorable entry point.
So it's like waiting for that perfect moment to jump on a moving carousel. You don't want to time it wrong and get thrown off.
Exactly, exactly. Now, once you've entered a trade risk management, this is key. The FBS analyst team, they really emphasize this as that third crucial step. And this is where our stop loss orders come in.
Okay, so can you explain what a stop loss order is and why it's so important, especially with trend trading?
Yeah, definitely.
So a stop loss order, it's basically like our safety net.
Yeah.
Like it automatically gets us out of the trade if the price, it starts moving against us too much.
Yeah, think of it like an insurance policy for your trades.
Okay.
It automatically exits that trade if the price moves against you past a certain point that you set. It helps to limit your potential losses. Super important, especially when your emotions are running high, you know?
Right.
It helps you stay disciplined.
Okay, so it's like setting a budget for a shopping spree, right?
Yeah.
Helps us so we don't overspend.
Exactly. You got it.
I like that. Okay, so that's managing the risk, but what about securing the profits?
That's where we set a profit target. So this is deciding, okay, at what price level am I happy? At what price am I going to exit to realize those gains?
Okay, so just as we have a plan for managing losses with that stop loss order, we also need a plan for, okay, this is where I'm going to take the money and run.
Exactly. Having that strategy and sticking to it, that's what it's all about. This is where really understanding, those chart patterns, those support and resistance levels, that all really comes in handy.
Yeah, it seems like there's quite a bit of technical analysis that's involved in trend trading, which is interesting because the basic concept sounds simple enough. Buy low, sell high,
All
right?
right.
But I imagine it's much more nuanced than that.
You hit the nail on the head there. Trend trading, it seems deceptively simple on the surface, but identifying those early shifts, those moments when a trend is maybe losing steam or about to reverse, that's where it gets really challenging.
Right, so that's what really separates those who are maybe just starting out from the more seasoned trader.
Yeah, you could say that. It takes a lot of, understanding the psychology of the markets, understanding risk management, and of course, a lot of technical analysis. You're kind of reading between the lines of those charts.
So the source mentions a few signs of a potential trend reversal.
Yeah.
Can you kind of break those down for us?
Yeah, so one of the big ones is a trend line break. So this is when the price, it closes below the trend line if it's an uptrend or above the trend line if it's a downtrend. That's usually a signal that, okay, maybe the momentum is shifting.
So it's like breaking through that support or that resistance level that we talked about earlier, right?
Exactly. And a lot of times this happens with other confirming signals. So you might see increased trading volume, bigger price swings, maybe multiple times the price tries to bounce back from that trend line, but it can't.
And that's when it's like, okay, something's really changing here.
Yeah, like the market's shouting at you.
Exactly.
Hey, something's up. Pay attention.
Pay attention. Right. Well, I imagine spotting those reversals early, especially, in the heat of the moment when your emotions are maybe getting in the way, that can be really tough.
Oh, absolutely. It's definitely one of the most challenging parts of trading. That's why a lot of experienced trend traders, they use a combination of the technical analysis, the risk management that we talked about, and you know what else? A lot of patience.
Patience, there it is again. We've heard it a lot. And I think that makes a lot of sense. It's not just jumping in on every single wave. It's about waiting for the right waves and riding that wave and having your plan.
Couldn't have said it better myself. And, we have to remember, trend trading, it's like any trading strategy. It's going to have its risks and it's going to have its rewards, right? It's not a guaranteed path to overnight riches, but it's a way to kind of ride those waves, those ebbs and flows in the market.
It's been incredibly insightful. I feel like we've covered a lot of ground here. We talked about the basics of identifying a trend, but then also some of those more, I guess, complex aspects of spotting those trend reversals, managing your risk, everything in between. So as we wrap up our deep dive into trend trading, any final words of wisdom? What's that key takeaway? What do you want our listener to walk away with today?
More than anything, I want them to know that trend trading, it's a journey. It's about constantly learning. You're developing your own understanding of the market.
Right.
You're honing those analytical skills, and you always have to be adaptable.
So you're not just copying somebody else's strategy. It's about making it your own.
Right. Exactly. And that's what I think makes trading so interesting, right? It's this constantly evolving puzzle.
It is. Well, this has been a really fantastic exploration of trend trading. I know our listeners are going to feel much more equipped to start their own trading journeys, but as always, I like to leave you with something to think about. So we discussed how important it is to identify those trends early for the best possible chance for profit. But how can you determine if a trend is really driven by those sustainable market forces or just a blip on the radar? Something to keep in mind as you explore Forex. Until next time, happy trading, everyone.